Focus is still on the Fed as Wall Street closes out a losing week. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are mixed today, with tech stocks falling as traders dump risk assets. And this shift comes as the market is continuing to adjust to the idea of an unusually aggressive tightening cycle at the Fed. And with that aggressive message this week, the 10-year Treasury yield is sitting at a fresh 3-year high. The yield on the 10-year Treasury note is up nearly 8 basis points to 2.69%. That's the highest level since March of 2019. But even as that yield continues to surge, mortgage rates have cooled a bit. A reminder that mortgage rates do typically track the movement of the 10-year Treasury yield. But Mortgage News Daily shows today's average 30-year fixed contract rate sitting at 4.97%. Now, earlier this week, that rate jumped above 5% for the first time since 2011. And oil prices are down today and on track for another weekly loss after the announcement of a major global reserve release this week. West Texas Intermediate crude futures trading around $96 per barrel, with Brent crude futures hovering around $100 per barrel. Now, the International Energy Agency's member countries have agreed to release a total of 240 million barrels of oil from reserves. Now, that includes 180 million total from the U.S. reserve and then 60 million from other member countries. That release will amount to about 1 million barrels per day from May to the end of the year. Analysts say this will help prices in the short term, but is not sufficient to cover losses from Russian oil in the market. The EU is also still considering a ban of Russian oil, which would complicate the supply issue. Now, taking a look at the economic data of the day, wholesale inventories were revised higher in February. Commerce Department reporting those inventories rose 2.5% versus the previous 2.1%. Wholesale inventories surged 19.9% year over year. Now, these inventories measure the stock of unsold goods that wholesalers have on hand and are a key component of GDP. Typically, high inventory signals an economic slowdown. People are not buying the goods from wholesalers, while lower inventory signals stronger growth. They're selling their goods often to other companies to then sell to consumers. Now, Spirit Airlines shares are flat, but a bit lower today after the company said it is considering JetBlue's massive takeover offer. The discount airline said it will begin those talks, and the deal could likely lead to a, quote, superior proposal over its previously planned merger with Frontier. JetBlue's CEO said the takeover would create a national low-fare challenger to the 4 large, dominant U.S. carriers that will result in lower fares and better service for customers. JetBlue did offer Spirit an all-cash $3.6 billion buyout earlier this week. Now, meantime, JetBlue is offering its flight attendants $1,000 bonuses to ensure staffing for the expected spring travel surge. Flight attendants who do not call out between today and May 31st are eligible for that bonus. Those who pick up open trips will also receive a $100 bonus. In an internal memo, JetBlue's head of customer care and programs said, quote, "The spring rewards programs come at a time when every flight makes a difference, as hours are tight and staffing levels are not where they need to be." U.S. airlines have struggled with staffing issues as travel rebounds from the pandemic. And looking ahead to next week, Q1 earnings season is on deck. The unofficial kickoff is Wednesday morning when the largest bank in the U.S., JP Chase, reports. The week also includes reports from the other major banks, Wells Fargo, Morgan Stanley, Citigroup, and Goldman Sachs. Investors will also be eyeing Delta Airlines and United Health Group. Be sure you don't miss the Wall Report next week to get all the details on those results. Let me know in the comments what your plans are for the weekend, and I'll see you next week. Have a good one.